today. Why are investors so bullish? With me now is Gene Munster, managing partner at Loop Funds. Gene, it's good to have you. And what accounts for this breakout move by Alphabet lately?
Okay, there are two reasons. First, it was undervalued entering the year. Given its stability year in, year out, Google is, in fact, the oxygen of the internet. And second is that there has been this advertising boom. Fun numbers here. 82% of Google's business is ad-based, and the ad business saw this rebound with the reopening and also the inflationary environment. When you put that together, the numbers are staggering, is that their ad business grew 70% in June. It grew about 34% in the March quarter. So to answer your question is what has driven it? It has been largely those two factors, and then maybe add a little bit of other bets. And they've got about 7 other core businesses within that. These are things that fall under the line. And of course, Waymo pops its head up occasionally in the news. That business is getting more optimism that has been driving shares.
So essentially advertising, so eyeballs online, let's call it, which is why you see Google doing what it's doing. You see Facebook up 40%, while Apple and Amazon are trailing. You know, still, Apple and Amazon would seem to be beneficiaries of people spending more time online. Why are they not participating in the same kinds of gains that Google and Facebook continue to enjoy?
It's just simply the numbers have been so impressive. And so when you look at Google and Facebook, those two, they had the biggest hit a year ago when advertisers started to pull back their spending, and then they had the biggest lift here. And so these stocks have essentially traded largely along those lines. I gravitate back to, the topic about Apple, Amazon, Google, Facebook. Ultimately, where is this going to play out? And I think that the lines are drawn. It looks like for a setup for investors to start to contemplate a major deceleration within Google's business. We talked about that 70% growth in the June quarter, and for the back half of the year, analysts are expecting kind of this to go to 30%. But Kelly, to answer your question, is that there's just been a more profound uptake in Google and Facebook's ad business. But I think you're going to see a changing of leadership here in the months ahead, kind of a gravitational back to Apple and Amazon.
I see, Gene, Google as a kind of a one-stop shop for everything digital, from YouTube to Google Docs to Google Classroom to advertising to all the things they do. What is the regulatory risk for Google?
Well, the recent line, that probably the biggest regulatory risk is not the most recent. The headlines more recently have been around South Korea and some of the App Store changes. I think that that's probably not Google's biggest regulatory risk. The biggest risk is that they do give preferential treatment to their advertising business. Search is the lion's share of that 82% of advertising revenue. And what that means when I say preferential treatment, when you search, for example, for a restaurant and you get Google Maps that comes up, that's an example as the first answer to it, the first response from Google. That preferential treatment some changes around that. It's happened in Europe. They've kind of powered through it. Probably the bigger regulatory or another regulatory risk is just talk of regulation, is that we are becoming increasingly more dependent on these companies, which obviously increases the target. And this next chapter around regulation is probably going to be riffs on what we've seen in South Korea.
That said, Gene, this story you're discussing still sees Apple shares of Alphabet barely reacting. I mean, this would seem to be a major salvo in the fight to open up the App Store. Why not a bigger reaction, you think?
There's two pieces. Number one is it takes longer than just words and proposed legislation for these for the substance of it to take place. It takes years. And second is that these companies have had this incredible power to work around some of the challenges. So, for example, I was just outlining some changes in the preferential search treatment, or maybe something between search and YouTube, some of those connections. If they were to sever those, I suspect that just our behavior, our dependence on it, the fact that this is the oxygen of the internet, investors recognize that. And when you need oxygen, you're going to find a way to get it. And I think Google will find a way to either increase its pricing on existing ads or find a way to navigate through this.
Well, the name Alphabet looks more appropriate than ever after its performance this year. Gene, thanks for your time today.
Shepard Smith here. Thanks for watching CNBC on YouTube.